You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the Infinite Banking Mastery Podcast. Last week, I spoke about the downsides of term insurance, and this week, I wanted to talk about the pros, the good things, as there certainly are both pros and cons, and I wanted to get into those more deeply. So the first pro I wanted to go over is simply if you need or want coverage, you have a family, you have children, you have a spouse who depends on your income, or even parents who might depend on your income, anyone actually who depends on your income, you should have coverage to protect that person. So you have a need for coverage, you have people, family members, someone in your life that you want to protect and that are dependent on your income, and yet you can't really afford to do permanent insurance. Or maybe you'd like to have a sizable death benefit, and the only way you can do that is with term insurance. And so, of course, it's always better to have some coverage than no coverage. Even if you have to get term insurance and you can't afford the amount of time you would like to lock it in for, you can shrink the amount of years so that it becomes affordable as well. So there are some different ways you can adjust a term contract so that it would be affordable. Another advantage to acquiring term insurance would be, as I've talked about many times, if you want to start a banking system and you just simply can't afford to do so yet. So you know that you're going to, you know that maybe your income is increasing later in the year or next year or something, and you want to lock in your ability to begin a system when you're ready. Or maybe you're waiting for something to happen, a bonus, a tax return. And so you decide, okay, I'm ready to get some life insurance. And once you decide that you're ready, you really should just go through underwriting because you never know what's going to happen. Life happens. We never know what's going to happen in life. Best to just lock in your insurability when you know and want to get that coverage, even if you're not ready to open the banking system or begin the banking system that you would like to begin. Another good reason would be if you are wanting to start a banking system and you know that your income will be larger later, or that you're about to pay off some debts and you're going to free up a bunch of cash flow. So you're like, well, maybe I shouldn't start it yet. And 6 months from now, I'm going to have more cash flow. Again, time is your best friend. It's always better to start with something sooner than later. And then if you have that term insurance in place, you can convert it and open a second policy at a later time and just continue to grow your system. Or maybe you're starting your system and at the same time, you do want to protect your family and you realize, this whole life isn't going to cover very much. And it's, I'm only going to end up with $100,000 of whole life insurance that correlates with the amount of premium I'm able to begin a policy. And I actually want to protect my family with $1 or $2 million instead of a measly $100,000. And so term insurance comes in great then too, because now you can bump up your total coverage, protect your family, but the focus of your premium dollars is going to be on your whole life policy, and where you're trying to grow your cash value, and then your death benefit will be growing, but at least you have your family covered with enough of a death benefit. Maybe you or a loved one, someone you know, does want that permanent coverage and doesn't really care if it's built in the style of infinite banking, but just knows that they will want the option to lock in permanent coverage at some point in the future, but they just maybe can't afford it yet. They can get the coverage, then they can convert it later, whether or not the purpose is for infinite banking. Maybe you're one of the lucky ones out there who actually has a pension and you think, hey, I've heard of these pension optimization strategies that I may want to implement when I'm retiring. And if you meet with someone and you have a conversation, or you meet with me and we have a conversation about maximizing your pension, of course, starting something permanent sooner is going to be better for you. And it's going to make your options when it comes time to actually implement your pension max options, it's going to all be better the sooner you start a whole life policy because you're going to have more cash accessible. However, a lot of times I've met with people who need a sizable death benefit to cover their spouse in the event of maximizing their pension, and they can't afford it now. They can't afford the amount it would cost to get enough permanent coverage to be able to set up the full amount of permanent coverage needed to replace their pension for their spouse. Because when you have a pension, it will pay out through your life, through your spouse's life. And so being able to replace what your spouse would expect to receive from your pension with the life insurance allows you both to enjoy more of the money while you both are living. To replace the spousal benefit for a pension like that, depending on what that payout will be for the spouse, the death benefit may need to be anywhere from $400,000 or $500,000 in death benefit up to $1 million or so. And so locking in that much permanent coverage can be higher, although of course when you're younger, it is lower. It still can be maybe too much for a family at their younger ages when they have young families and paying for school and different things that are expensive. And so they can lock in that term. And then once the option comes up for them to choose how they would like to receive their pension, my life only, single life only, or a spousal option, then at that time, we have an opportunity where we can look at what the person would like to do, and at least they have a choice. Having life insurance in place, even a term policy, would allow a person with a pension the choice of what kind of spousal option they would want to proceed with for their spouse. And usually single life only will pay the most, but you're going to need something to protect your spouse because they have to sign off on that and they may actually want that guaranteed income stream. So you have to have something else that would protect them in the event that you pass away too soon, the person with the pension. Going back to the benefit of term conversion, having that term policy, maybe in addition to a whole life policy, or maybe a standalone because you can't afford yet to start your whole life policy and your infinite banking plan. At least you can convert that term and you can convert it in whatever size amount of blocks of death benefit that you want. You don't have to do the whole thing at once. So it ensures you can grow your system. And then there is also the benefit of having term insurance within a whole life policy. That's not always needed for every policy. That's not always the best way to go for every person in their policy, but it is another possibility. And sometimes it's built in because it's needed to be built into the whole life policy to bump up the death benefit so that you can cram in some more cash over and above the cost of the insurance to make your policy as efficient as possible. And then that term rider within the whole life policy, it's possible that that can be converted once it's no longer needed inside of the whole life policy. Oh, and last but not least, term comes in handy for business owners, those with partners and also those without partners, because it will at least cover the risk of a partner who passes away too young and at a time when the business heavily depends on them, so that the other partners are able to buy out that deceased partner's shares of the company, or even with a single owner, keeps the family from having to rush off and do a fire sale of the business. Of course, a whole life contract would be better and would provide more funding for different business needs or unexpected catastrophes, but term is better than nothing. So that's my brief overview on the pros of term insurance. Like I mentioned in my last podcast, I just want to say again that when you have a term policy and you are interested in moving forward with the infinite banking concept, it is a good idea to have that term at a company that has great whole life for you to be able to convert to, so that you don't have to try to get through underwriting again at a later time when you're ready to grow your system, and you have a convertible term at a place with great products. So as always, if you'd like to connect, if you would like my help to build a plan for you and would like to work together, please reach out to Valerie at alphaomegawealth.com. Thanks for listening. Have a great week.
This is thepodcastfactory.com.